Hi, everyone. This is Ben Jackson with the IPA. We're going to give folks just another second or two to join, and then we are going to get started. As everyone should have seen from the entry screen, this webinar will be recorded, and we will post it in the members only section after this. So if you have colleagues or others who might benefit, they will be able to watch the webinar after we are complete. I see we have a number of attendees joining, so let me get us started. Again, thank you everyone for joining us today. I'm Ben Jackson. I'm the Chief Operating Officer at the IPA. And as a reminder, we are recording this session. We also want to encourage questions, so certainly please put questions in the Q&A as they occur to you, and we will plan to answer them at the end. That also gives you the ability to ask questions anonymously if you would like. Today, we are joined by Tia Ilori, the Vice President of Risk Strategy at Deep Labs. And prior to Deep Labs, she worked in the fraud and risk departments at Visa. And I want to highlight one part of her career because I know that a lot of the folks on here would be interested in some of her adventures. In that she was the head of global investigations for payment fraud disruption. And I know that we have some investigators on here, so certainly that will color some of the things that she says with this presentation. And I encourage you all to sort of ask questions with that in mind, that she understands that part of the business as well as everything else that she's going to talk about. And Tia will also join us later this month in Chicago at our compliance boot camp. So this is sort of the beginning of the conversation. And certainly if you guys want more, we can provide information about how to register for that. And with that, Tia, thank you so much for joining us today.
Well, thanks for having me, Ben. Happy to be here. Excited to share our perspective and to educate your membership on Deep Labs' capabilities.
And so we want to jump right in here and talk about some of the risks that the payment system has faced and how they've changed. And payment system risk has changed over the course of the pandemic. And then as we've kind of come out of the depths of the pandemic, and that kind of has created a need for innovative solutions to combat fraud, to keep up with that environment. Can you start by giving us kind of a high level state of the union of the sort of risks and fraud you're seeing right now?
Sure, absolutely. To underscore your point, COVID has changed the world. And the way that I look at it is it's ushered in a new era, disrupting the way that we conduct commerce and engage socially. The risk and fraud landscape, it continues to experience many of the same vectors and fraud schemes that were observed over the past 2 years, but the context has changed, particularly with respect to states that have discontinued pandemic stimulus programs. Today, bad actors continue to weaponize business logic errors. What that means is email compromise, exploiting weaknesses in account security in the form of account takeover and enumeration, and deploy social engineering attacks. And these tactics convince consumers to divulge personal information they would not otherwise divulge to an untrusted party. And in addition, we're also identifying, unfortunately, first-party misuse. It's commonly referred to as first-party fraud in the payments world, but it's fueled by buyer's remorse from legitimate consumers. And also digital shoplifting. Digital shoplifting has taken on a new phenomenon. You have threat actors, fraudsters, and bad actors all within the same family that digitally shoplift, and they actually combine chargebacks as part of that scheme. And the way that it works is if there's a fraudulent card with $100 or $200 on it, and they commit e-commerce fraud, they can then call that exact same bank and ask for a chargeback claim. And the reason for that is they're double monetizing their gains. So think about the card, the way that it was monetized, and then illegally, in my opinion, using chargeback rules that are inherent to legitimate customers as a form to double their gains. We also see bots. Bots are legitimately used, but they're also used nefariously. And bots allow a lot of threat actors to scale their attacks and mimic human behavior. It's very interesting when you're on a website and you're conducting an e-commerce transaction and you run into a reCAPTCHA screen and you have to identify the number of tigers in a picture, the number of bridges. Well, some of those bots are actually mimicking the speed of humans to bypass that security protocol. And then sleeper cells. Sleeper cells are one of the hardest to detect if your systems are devoid of context. And these threats continue to be persistent. They are sophisticated. They are the typical, I would say they're the typical sophisticated attacks, but they are the initial entry to a scaled attack. So it always starts with the first phase, a second phase, a third phase. So I steal Ben's account. Then I need to probe to see if Ben's account is authenticated. I then need to determine how to monetize Ben's account. It's a staged attack and it's scaled regularly. In many cases, the attacks progress unabated for days and sometimes weeks and even months. We've observed this through a lot of our retrospective analysis and trends that we've seen in the industry where these sleeper cells lie dormant for months on end.
And so I probably, maybe I should have led with this, but to give our audience a better sense of where you're getting this perspective, can you describe what Deep Labs does and who you work with and how you approach that work?
Sure. One of the best ways to understand our company is to frame the conversation around talent, technology, and tactics. When I think about talent, the team at Deep Labs is comprised of world-class experts with extensive expertise spanning research and technology, engineering, product, commercial, and delivery. Our backgrounds span risk management, data science, technology, payment technology to be specific, product and consultative offerings. When I think about technology, we're uniquely positioned to address a variety of risks through our platform, Deep Decision, which powers a variety of products that map to various use cases. Let me give you a few examples of that. Deep Risk, Deep Detect, and Deep Discovery. I know you're sensing a theme there, Ben, but Deep Risk is one of our main products that identifies first-party fraud, account takeover, and it's one of the products that is used the most because these are the use cases at the time that are most prevalent. When you think about digital shoplifting, e-commerce fraud, that occurs pretty regularly. But when combined with some of the other attributes, it can cause severe havoc on an issuer's platform as well as a merchant's. When we think about Deep Detect, we think about sleeper cells and fraud rings and how we can leverage that capability to identify these dormant clusters that, again, they lie and they wait and then they attack. It's sort of like spraying and praying. And then Deep Discovery. Deep Discovery looks at patterns and forensic analysis and performs data enrichment, and they all work in concert with one another. It's a really powerful tool, and I'm only naming a few of the products because we'll get into more about some of the use cases and success stories throughout the course of the discussion. The final layer is sort of our tactics, and with Deep Decision, clients, they can better understand the changing behavior in an evolving world by combining not only the sophisticated behavioral modeling that we do, but signal intelligence, survey data, a persona library. And these are all intended to identify and anticipate user behavior. You'll sense a theme throughout our discussion. I talk a lot about behavior and the changing of behavior. We're not talking about just the card. We're talking about the behavior and how other behaviors and how those behaviors look similar, how they look different, how they may be indicative of legitimate transactions, and also indicative of nefarious activity.
So we started, and some of the things you described, you talked about that context and the things that you're seeing and how the context has changed. As you think about the changing world of risk and fraud payments, what are some things that companies can do to start to adapt to that changing environment?
Yeah, it's a great question. We service a broad range of clients, from acquirers to fintechs, processors, uh, networks, et cetera. And they benefit from the platform's unique ability to go above and beyond static rule-based systems and to add an additive layer to their existing tech stack. So it's no rip and replace. They have invested a tremendous amount of capital into these systems. And what we do is we enrich and evolve their systems. It evolves based on the consumer's behavior. It evolves based on new behaviors that are identified, and it can also anticipate malicious actors' behavior. Again, looking back at trends that we've seen throughout the industry, the behavior doesn't change, the targets change. So oftentimes issuers are confused about, is this a new fraud scheme? It's new to them, but it's not new to the industry.
So you said, it's not a rip and replace. Um, and there's that changing space. How can companies sort of discern, like, what is normal, especially as things change, versus what's sort of anomalous in that payment space then?
Yeah, so that's the $1 million question, and I think it's about redefining what normal is versus what nefarious is. And it's important to understand that the modus operandi of a bad actor targets the weakest link across the payment system, be it the merchant, the acquirer, the customer, the issuer, the processor, and I'll throw a wild card in here, an employee. Let's talk a little bit about the employees. Employees are also vulnerable to these types of attacks, particularly when threat actors look for ransomware targets. It starts with potentially a fictitious job requisition that contains malware. The goal of targeting that particular employee is privileged access. That's the goal, whether they're a sysadmin, whether they're a chief information security officer, it doesn't matter. On social media, threat actors will use the data in order to masquerade as a company that's offering them a job. And their goal is to get the target to click on the link. That link often contains malware that can be downloaded, unfortunately, to a network system, to a laptop. And the goal of that malware is to perform reconnaissance. It's to understand the access that that employee has, and they're looking for what's called privileged access, where they can elevate that access so that they can commit more nefarious things, such as increasing the credit limits. And that's, again, the start of a scaled attack. When we think about customers are continuing to fall victim to peer-to-peer schemes. Name any platform and you've seen them in the headlines. But what the headlines don't report is the actual life cycle of that attack. And it generally starts with a text message, social engineering, something to invoke emotion from the customer to get them to click on the link so that they can then either take over the account or they can scam them out of, again, their hard-earned money. Another customer scam is SIM swapping. At its basic level, it's SIM hijacking. And what that is it's a form of account takeover involving one's mobile identity. This has been prevalent throughout the years, but we've seen a resurgence in it over the past 2 years, particularly as we've been under lockdown during COVID. Merchants also experience account takeover. And this is really important because oftentimes we think about account takeover as being related exclusively to a consumer or a financial institution. It's not. It's actually anyone who has an account for anything can experience an account takeover if a threat actor is able to circumvent the security protocols that are in place to protect that account. Merchants experience account takeover as bad actors. They compromise terminal credentials. And these terminals can be a mobile point of sale, it can be a virtual point of sale. The goal of the bad actor is to obtain access to the system for purposes of issuing fraudulent credits. These fraudulent credits are dispersed among various debit cards with the hope of the transaction settling. So the transaction will oftentimes authorize and settle. You may have some pen-based transactions that don't. They clear and settle at the same time. But for this conversation, let's just pretend that they were able to, push out millions and millions of dollars in fraudulent credit, leveraging an account that belonged to a merchant that was taken over. And then the hope of that is to assign all of these credits to various debit cards with the hope of cashing them out or purchasing store value assets such as cryptocurrency. And then finally, issuers. Issuers are continuing to refine their defenses to combat not only money mules, but synthetic IDs. Synthetic fraud is one of the, I would say, most challenging ways to authenticate is Tia Ilori really Tia Ilori. That's why it's important to also have systems and tools in place to detect this type of, identity theft, but also contextual data that can help you make better decisions with respect to approving an application and also monitoring the behavior once the application is approved.
So it's not, to build a little bit on what you said earlier, it's not that the old rules don't work. It's just that there's a bigger context that they have to play in. Is that the fair way to think about it?
I think you're spot on. I think context is key. You'll hear that throughout the course of the discussion. Where you see issuers struggling is where they lack additional context. And the context cannot solely rely on Tia's retrospective view. What did Tia do prior to 2019? What did she do in 2020, 2021, 2022? It's changed constantly. And in order to keep pace with Tia, your systems have to adapt constantly as well. And that's a key differentiator when you're thinking about engaging with a new vendor, when you think about what your problems are versus what your goals are and that gap and how you narrow the gap, it's all about context. I'll share a story with you. I did not start traveling again until March of this year. So it maybe about 18, 20 months, I hadn't traveled. I traveled. I did not book my ticket, but I traveled anyway. As soon as I landed, there was a decline at the airport. As soon as I went to the hotel, there was another decline. There was no OTP to authenticate me. It was just decline, decline, decline. Well, after the third decline, unfortunately, again, I heart my issuer. Unfortunately, they did lose top of wallet. Those declines were embarrassing. One of my good friends who was with me, she said, if you have a liquidity issue, we got you. I said, I don't have a liquidity issue. I think the issuer may have a lack of contextual issue here. And so I was able to switch my card out very quickly, but I'm not sure that was better because this particular issuer approved everything. And I thought, well, I went from one spectrum to the other, but the issuer that I switched to did two things very well. One, immediately when they saw a transaction that was in the Midwest, and I live in Northern California, they immediately called and sent a text message. So they tried various ways to get in touch with me. So again, the text message worked. They sent another text message confirming that it worked and asked me to reconfirm, and I was good to go. That's the type of customer service that you want. It also shows that they're adding additional context to their decision making without impacting the customer. So they were willing to take a loss on that first transaction, which I think we were at a restaurant, but the subsequent ones, they put a hold on the account until such time that they were able to authenticate that it was me. And I did wonder how many other people were experiencing this sort of decline issue at the point of sale, and were they experiencing the same level of embarrassment and friction and decline? And what happened, the hotel said, hey, listen, we have these other forms of payments. And it just turned into like this competition to see if they could convert me to a buy now, pay later, or to one of their rewards cards. So I thought it has far-reaching implications downstream when you're overly aggressive with your declines. By the same token, if you're too lax, it's a safe haven for fraudsters.
So that kind of anticipates the next question, where we talk about, you described how some folks way too tight with those internal controls, others were maybe a little loose with them. But when you think about the types of the fraud schemes, the initial phases, and then what happens during the attack, you went into that a little bit. When you see those kinds of things, what are the internal controls or policies that get circumvented the most, and what are the most commonly exploited vulnerabilities that you see?
So it's synthetic ID fraud, hardest to detect, and mule detection. Again, I think both could benefit from additional context because they're difficult to combat in isolation. Thinking about Deep Decision Platform and its array of powerful products, we identify personas that target, or I would say that they identify mule-like activity across different populations. And that's really important because, as I talked about earlier, the behavior doesn't change, the targets do. So the behavior that you're seeing at Ben's bank is no different than the behavior that you would see at Tia's bank. But Ben and Tia's bank, they don't talk to one another. And when they do, they don't share the level of detail that you need in order to go in and tune those rules. What you need to look for is you need to look for additional context beyond just how the mules are behaving. You want to look at the context of how your legitimate cardholders are behaving as well, because there'll be sort of a difference between how they operate. The population may be different. It's also important to look at the length of time that the account has been open and the behavior associated with it. I'll give you an example. There is a scheme called collusive merchants. And oftentimes, and it's unfortunate, oftentimes a cardholder and a merchant will collude to defraud an issuer. The cardholder will open up an account at a reputable financial institution. That account will be dormant for a period of a time. They'll have little micro loans to keep, micro transactions to keep the card active, but then they'll commit like a $4,000 or $5,000 transaction with a small merchant. The small merchant will then settle the transaction with their acquirer and split the proceeds 50-50 or 60-40 or whatever the terms of their deal is. Afterwards, the card will go into default and the merchant will close their account. That is another scheme that we're seeing. And what's interesting about this scheme is it is easy to find, because oftentimes people with not a lot of history on those accounts, they're dormant for a reason. They're dormant because they don't want to burn up the credit because they need the credit in order to reap the benefits of the proceeds. That's why you see the small micro accounts. Another scheme that we're seeing that is very, very prevalent is going back to the mobile device, and the mobile device acting as the identity for a lot of people. Our identities are so intertwined: mobile device versus your online identity versus your personal identifiable information. It's all sort of incestuous and intertwined. But sometimes these spam callers are spoofing numbers from the bank. They spoof numbers from the bank, from healthcare providers, in an effort to get consumers to disclose their personal information. What's interesting about that is a lot of the cell providers have introduced a little friction, and that friction could be in the form of turning on only receiving calls from numbers that are known within your contact list, identifying the call as spam, meaning they've seen this number throughout their network and it has a high propensity of being blocked. therefore it is blocked. But unfortunately, customers still fall victim to providing the information. And so one of the, I think it's under promoted. It's education and awareness, continuous education and awareness to the customers that a bank will never ask you for information that they already have on file. I'll take you through a story with me. Just yesterday, I had a call from a merchant asking me to come pick something up, but they asked for my date of birth. And I thought, no, you don't need my date of birth to remind me to pick something up. But again, being very vigilant and securing your personal information is really important. You are not required to give it away unless it is associated with something that you know and a trusted advisor or a trusted source. So those are areas that I think that as an industry we could continue to accelerate. And even if we think that we're over communicating, we should continue to communicate and educate consumers on not clicking on links, with text messaging being the new form of phishing, making sure that we redirect customers back to the reputable websites, and then making sure that they understand if they do click on something that is nefarious, that they call their financial institution immediately and put some safeguards in place to protect their account.
And you mentioned a bunch of the different fraud schemes there. Which one is the hardest to detect, do you think? Or is there another one that's even kind of sneakier, trickier?
Well, I think that they're not hard to detect. I think that most of the detection is related to lack of context. I think it's a manual process at some organizations. It's very manual. It can be, you could have disparate systems that you have to pull together so that you have a holistic look at all of the evidence or digital fingerprints that you need in order to reconstruct an event. And time is of the essence. Oftentimes it's scaled at such a high rate that you're trying to figure out how it originated, what are the impacts, who are the impacted customers, what disclosures you may need. And at that point, it turns into, unfortunately, an event that's at the corporate level, because you have to stop the fraud before the threat actor drains the account. Luckily, we've had clients that have reached out to us during these events to say, here's what's going on. Here's where we need your assistance. Please tell us if you find anything. In fact, we worked with a pretty large fintech provider who had an event and had a scheme. We immediately ingested all of their data into our Deep Decision platform. We used several of our products, including Deep Risk and Deep Detect. I gave you some color on how those solutions worked earlier, and swiftly identified a sleeper cell. And what was interesting about that sleeper cell is sleeper cells are, for lack of a better term, dormant. They're dormant because they're staged, and they're staged to attack once the threat actor has all of the other attack vectors set up. It's not just a one and done, and it's never about just one institution. The institution can only see its network and its card base. But what we see, and what I've seen in my past life, is I can see everything. You can see that they breached an acquirer's account. They breached a merchant's account. They've set up point-to-point encryption, like they want to encrypt their network. I mean, they're thinking about the security, and they've also funneled the transactions to DDA accounts and used wire transfers, again, to obfuscate their ill-gotten gains, sometimes internationally, which makes it harder to recover.
And you mentioned that unfortunately sometimes criminals will circumvent defenses. In your experience, as you've worked with these different companies, what is the most difficult thing for them when they try to investigate a fraud incident? And are there things that they can do to make it easier to clean up after an attack?
Yeah, so couple thoughts there. One, it's really important that organizations don't think about solutions as a panacea. So when Deep Labs has Deep Decision and its array of products, it's really about signal enrichment. It's about enriching their existing data. But in addition to the technology, it's important to remain vigilant about the shifts in today's economy. You want to make sure that you have business intelligence, because the business intelligence, whether it's alerting from the FBI or the Electronic Crimes Task Force or FTC, that actually acts as an additional layer. Because if you understand how the crimes are perpetrated and you see it on your network and you're using one of our solutions to attack it, you have 90% of the contextual data that you need. You really do. So it's really about making sure that you're pulling in all of the information, both anecdotally, systematically, statistically, and that you have the right team members looking at it so that you can stop an attack. The problem that I've seen organizations run into is once it's scaled, it creates an operational nightmare. I mean, it's almost a nuisance. The attack is so broad and it's so wide that they have customers calling. If media has gotten a hold of it, they're on the news. Unfortunately, you could have networks saying, hey, we see this as well. We need to abate it quickly or remediate. And then sometimes you have law enforcement that gets involved as well. So it's really about timing of the essence. It's about standing up a team that can swiftly move into place, identify where the attack is happening, identify the remediation efforts, bring in solutions such as deep labs in order to understand what exactly happened before, during, and after, and what other trends they should be on the lookout for, because it's not uncommon for threat actors to leave a back door. So it's almost a disguise where you're working this one event, and once you shut it down, there's another event, and that's by design. They just move. So now you're playing whack-a-mole. But going back to the platform and the product, what you want to do is you want to take a holistic look so that you're not in a reactive mode. You can start to see probing behaviors that are indicative of an attack being launched. Every threat actor and bad actor starts to probe for efficacy. They usually launch these attacks around a 3-day weekend. Don't know why. I still haven't been able to figure that out. But I think if I were to theorize here, I think they believe that the defenses are down when it's actually quite the opposite. They're up because during a 3-day weekend, you expect your sales to be higher because people are out enjoying the past holiday shopping, etc. So I would say that it's a combination of things. It's not just one thing. You should have a playbook in place so that it's fraud-based, it's security-based, and that you have a containment strategy.
And then you mentioned the economy, and the economy has been on a little bit of a roller coaster here, and some numbers came out. Costs are going up. We may be hitting a recession, depending on how skittish people are about the R word. Is this a time when we see more fraud, and is now a time maybe to be scaling up? And if I'm the fraud person, how do I talk to my manager about, hey, I know costs on everything are going up, but can you give me a little more money for this?
That's a great question. I would encourage managers to view risk management as an investment in the company's growth strategy that also preserves revenue by ensuring that the sales are not eroded by fraud. And you really have to tighten that narrative because expenses are reining in expenses. And as part of that, they look for where can we do some, maybe monetary cuts here so that we can bolster this area. But it's important to know that if you make those cuts, you may be sacrificing the sales growth that you intended to reach, X% by X date. So I think that you have to balance the two. I think it's really important to demonstrate proof of concept, proof of value, and to perform that cost benefit analysis. And that includes making sure that when you bring in contextual decision making, such as Deep Labs and its array of products, that you can demonstrate to your department heads and to your executives that this additional context layered in has saved us X% in fraud and has preserved sales by X%. When you speak in terms of revenue in dollars and cents, it tends to get the executive's attention. So it's about revenue preservation, it's about growth, it's about strategy, and it's about being prepared for the scaled attacks, because it's not they won't attack us, it's when and how quickly can we contain it.
And then one more question for you, which is just kind of a broad one, and certainly as you think over both the stuff that you're seeing today and the work that you've done and the various roles that you've played, if you were going to distill it down and give one piece of advice to the head of fraud and risk at all of these companies, what's kind of the most important thing for them to keep in mind? Or maybe it's more than one, but what should they really be thinking about?
Yeah, I think it ties well to my former response that the fraud department heads continue to make investments in systems in support of growth objectives and evaluating platforms that go above and beyond the static rules economically can provide dividends in the future. These are the benefits afforded to organizations that partner with Deep Labs and leverage our Deep Decision platform and our product suite. It's really important that you contextualize data. Data that is stale does not provide the level of sophistication for today's digital era, but you don't have to rip and replace it. You only need to understand where your gaps are, where your pain points are, what the threats are, and how the contextual element can help you solve for that. It should grow as you grow. It should be adaptable. It should be able to see trends in a predictive manner that may be indicative of some of the money mule schemes, the synthetic ID, and the e-commerce fraud that we continue to see. And then what's your risk appetite? Defining that risk appetite up front, making sure that you understand, okay, for $5 chargebacks, we're not sure if that provides the level of benefit in terms of working those chargebacks. However, how many $5 transactions have I seen over the course of 90 days? So again, stepping back and taking a holistic view to say, this is indicative of a potential scam. And I will go and look for all of the behaviors that look like this and start to perform a retrospective so that we can continue to tune our systems. We bring in partners like Deep Labs to help us contextualize it so that we make smarter decisions, so that the next time that Tia travels to the Midwest, it's not, we haven't seen her travel here, we haven't seen this, it's, we have some context. There's a huge conference there. Maybe we have other cardholders that are also in the vicinity that have Tia's similar behavior.
And I want to take 1 second before we wrap up, because I think we all sort of acknowledge that things radically changed over the last couple of years. And things I feel like continue to change. You know, like you say, people are kind of coming out again, behaviors are changing again. Is there anything, and maybe the pandemic was a black swan event, but I think that, you know, there are localized big events that can change context. For example, you know, a hurricane or something like that, even, right? Are there ways when people see that, that they can kind of anticipate, okay, I know it's going to change. I know the context is going to change. How do they get ready?
Yeah, let's take two diametrically opposite events. And this is one of the things that I get really excited about when I talk to our head of research and our head of technology. It's really about using persona-based intelligence, signals, and psychographics. Let's take the Super Bowl, for example. We all know that's a big event. It will be based in, I believe it's based in Arizona in 2023. And they have a lot of time to get ready for that event, right? So they have a whole year or two. But let's contrast that with a hurricane. You usually get, maybe it's a month out, 14, but the category of it takes shape right before it lands. And so typically when you see, and maybe it's Florida, for example, you typically see consumers buying gas, right? There's a run on fuel, there's grocery shopping, run on banks, but that context can also change because as consumers adopt electric vehicles, it may not be gas that serves as your additive layer. It may be something else. The point of the matter is to contextualize the data so that you understand what's going on in that particular area is not just related to Florida and its weather. It can be California and its wildfires,
Right.
or the earthquakes. So thinking about how weather can change spending patterns it was one of the, when I joined Deep Labs in February, it was one of those aha moments. And I said, absolutely, it changes my behavior no matter where I am. One, I won't shop if it's 115 degrees outside. And California just experienced a heat wave, and it was quite the opposite because I don't have air conditioning. So I flocked to the mall. But you understand how that context can change my behavior. And then if you were to magnify that, it changes everyone's behavior. What's important is that the financial institutions and the merchants know this as well, but the financial institutions can use the contextual data to make stronger decisions so that they, retain their client base.
And what's the craziest kind of fraud that you've ever seen, or the most sort of like, outlandish thing that you've run across as you've looked at this sort of behavior by people?
Okay, so there's one case I have to be careful in terms of giving out too much information, but there was a a big box retailer that whose customer decided to call a network to complain that the retailer would not take back his packages of bacon. And the reason for that was he indicated that the bacon did not meet the service guarantee and that he was, owed a refund. And, the merchant said, we gave you a courteous exchange. And what was interesting about this, I thought it was just absolutely ridiculous in my opinion, but I had to help, the customer. What was interesting was it was a complete scam. And this scam had occurred in so many different counties within this person's state. And as I worked with the retailer, I said, how many other locations do you have? And I wonder if it's just related to your store or if it's related to other grocery stores. And there's a trade organization that caucuses and convenes grocers, and they found that it was not related. It was a total fraud scheme. And he would use a payment instrument requesting that, the price of bacon be refunded. So that's the craziest scheme that I had. I thought it was wild. I'll give you a second one, which I was able to identify a breach investigation based on the complaint that a particular issuer saw reversals at a fast food place. And I thought, fast food, if you ask the fast food establishment for, hey, listen, this wasn't prepared, but they're usually pretty good at, recreating your order. But this was indicative of testing. It wasn't actually someone going back in and saying, hey, my fries are cold. It was actually testing. And those accounts that were tested were a part of one of the largest data breaches in the world. So just
Wow.
think, it was really wild. It was incidentally identified, but you probably don't want to use a fast food restaurant because you get investigators like me that say, that doesn't make any sense.
Well, it's a great example of context, right? Absolutely.
Yeah, absolutely.
Well, I don't see any questions from our audience, but let me just take a moment. Does anybody have anything that they'd like to bring up here before we wrap up? Let me give folks a second if you want to drop something in the chat or in the Q&A. I don't see anybody furiously typing. So, which is, but certainly, Tia, if folks wanted to reach out to you, what's the best way to do that if they wanted to discuss something privately?
Sure. Reach out to me directly. I'll provide my contact information. We can also provide a leaflet that goes into more detail on our technology. And as you noted at the top of the hour, I'll be in Chicago where I'll provide a demo and go into more detail on each one of the schemes and how Deep Lab Solution is solving for a myriad of risk challenges and fraud schemes in the industry.
Well, thank you very much. Oh, wait, we do have a question here before I shut things down. So this is a question about enumeration. Can you talk a little bit about enumeration and some of the effective techniques you've seen used?
Yeah. So first of all, thank you for the question. And I'll start by saying that I understand that enumeration is a difficult fraud scheme to solve for. It's not difficult to detect because I think there's a litany of issuers that can tell you how it works, what it does, and how much it costs their organization. What I think needs to occur from an enumeration standpoint is a network level identifier. That's the first. The second is velocity checks, both on the merchant side and on the issuing side. Tokenization has been shown to slow down enumeration, but I don't think that it completely eliminates enumeration schemes. And then the fourth recommendation is working really closely with acquirers and merchants to upgrade those systems so that they have tools that are comparable to a reCAPTCHA that identifies when schemes or systematic probing is being leveraged by a merchant. So it's not the merchant per se, it's how the bad actors leverage their systems to commit enumeration. And that in and of itself wreaks havoc on the industry. It's costly. And to be quite frank, Ben, it's a nuisance. So when we think about enumeration here at Deep Labs, we think about how do we detect internally those particular cards that may have a higher propensity for enumeration attacks or a card base or subset of cards. But in terms of completely eliminating it, I think it's a shared responsibility across merchants, acquirers, issuers, and the networks to combat this problem so that we don't have enumeration schemes that are costly to our issuers and unfortunately erode some of the trust from a merchant perspective.
And just for my own edification, can you define enumeration?
Yeah, so it's the systematic, it's a way of systematically deriving a primary account number. So if you think about 10, 15 years ago, credit master attack, it's been modernized and it doesn't take a lot to guess the lung algorithm. And then you need a vehicle to test it to see if it's legit. And that is a merchant system. So again, when I talk about account takeover for a merchant, that's one issue. When I talk about account security for a merchant, that's another, because it's the security system that is absent at the merchant's acceptance point that allows enumeration to take place.
Very good. Any additional questions? Yeah, so just a thank you from our attendee for answering that.
You're welcome.
Okay, I think that's it. All righty. Well, thank you again so much. And thank you all for attending. And then as Tia mentioned, if you want to get in touch with her, certainly feel free to email me at bjackson@ipa.org. You guys, everyone here should have my email address being a member. And if you can, please join us in Chicago later this month. Thanks again, everyone. Thank you, Tia.
All right. Thank you, Ben. Thanks, everyone. Bye-bye.
Bye-bye.